Good morning, hello and welcome to this Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is the final day of the trading week and things don't look with that any better as well because if you look at the trends in the GIFT Nifty, they're pointing to another subdued start for our own markets. And so far this week itself, Nifty has been already declined by about 0.3%. Today also the pre-opened rates are also pointing out to quite a subdued start this morning itself. But yes, the tariff jitters that can be felt today too because the US President Donald Trump has rolled out modified tariffs for about 69 countries in the range of 10 to 50%. Now, for instance, he has increased tariffs on Canadian imports to about 35% from 25%. But India is still stuck with that 25% tariffs that he had spelled out yesterday, along with the penalties, which he has not specified as to what these penalties are. But yes, now these tariffs will take effect from August 1st instead of today, August 7th instead of today. So this gives more scope for countries to negotiate their trade deals. Earlier, we did see consistent warnings that came in from the White House that the tariff won't be extended, and now we have 3 days of extension. So that's uncertainty and chatter that also continues going ahead for another week itself. But yes, global markets that did not react well to this news. US markets were quite muted. Even Asia Pacific markets fell this morning, reacting to these uncertain times. But one move that was quite noticeable for India as well, because that spells out as a bad news, that is your dollar index once again back to about that 100 mark. So yes, that doesn't spell out as a very good news for India coming in ahead as well. But yes, our earnings will continue for OWN, and we have some more earnings reaction. For instance, we have Coal India, Eicher Motors, which have reported some good numbers from the June quarter itself. Swiggy, however, has not turned out as good as Eternal. Losses have more than doubled. So we'll discuss all of these stocks today with our experts. And also don't forget, we'll also be taking your stock related queries as well. But before that, let's take a quick check of the top headlines, sir. Just hours ahead of August 1 reciprocal tariffs deadline, US President Donald Trump has issued an update on duties ranging from 10% to 41%. Goods that have transshipped in a bid to avoid tariffs will face another 40% levy, according to the White House. In the updated list, India continues to face 25% tariffs on imported goods. The tariffs will come into effect into 7 days from signing of this order. Stocks in the Wall Street end lower, with S&P 500 notching third day of close as Meta and Microsoft failed to uplift market sentiment despite strong results. The Dow Jones fell over 330 points as investors await all-important jobs data later this evening. Asia Pacific markets also opened lower as US President Donald Trump signed order for imposing higher tariffs on dozens of economies. Yet another gap down start is likely for our own markets. Crude oil prices have eased over uncertainty over Donald Trump's tariffs loomed over investors. Meanwhile, gold prices rise as investors return to the safe haven asset amid tariff risk. And in key earnings, we have Coal India June quarter performance, which has beaten estimates despite subdued volumes, and Eicher Motors was also above the estimates, but net profit was below the estimates. Keep your eye out for ITC results today. The FMCG could see some margin pressure due to tobacco inflation. All right, if you look at yesterday, of course, the tariff jitters continued and that weighed on the Nifty because that slipped below that 24,800 mark. Throughout the intraday, we did see some, positive momentum, but eventually we did settle with with about 100 points decline. But the market breadth that continued to remain weak. 39 out of 50 Nifty stocks dropped into the sea of red. On the other hand, if you look at the broader end of the markets, that also did not surprise on the positive end because they also mirrored some of the weakness. Among the sectoral indices, barring FMCG, all of them ended in the negative terrain. But yes, today we'll watch out for more results reaction. ITC, Godrej Properties will be reporting their results today. Also, today is the mark of the start of the new August series. So we'll watch out for this August series, how it will pan out, because last series Nifty did end with about 3% decline, snapping its 4 series of consecutive gains that it had seen earlier this year itself. But we'll watch out how this August series pans out. We have some trade negotiations with the US, 6th round of talks which will be taking place in the mid-August. RBI monetary policy also will be due. We'll watch out with if there is enough liquidity injection which will be needed for the markets as well. And we'll also have the MSCI August rejig. We can have the likes of Hitachi and Vishal Mega Marts. We'll be watching out for these stocks, and Nifty 50 reshuffle will also be taking place in this August series as well. So we can watch out for Interglobe Aviation, whether or not it can see an entry into the heavyweight, into the index benchmark. But yes, the fund flows data, that continues to be disappointing because the FIs, they have sold stocks which is worth about 5,500 crore rupees in the cash markets. On the other hand, DIIs, they stood as buyers buying stocks which was worth about 6,100 rupees in the cash markets itself. Nifty put call ratio climbing to about 1 from 0.87 levels in the previous session. So that is all the cues that we need to watch out for today in the trading session as well. But yes, the pre-open rates once again to a subdued sentiment. Sensex down about 100 points. Nifty also below that 24,750 mark. But on that note, let's quickly get on board with our technical expert of the show. Joining me is Raja Venkatraman, co-founder of NeoTrader. Raja, good morning. Yesterday we felt that tariff jitters, and it didn't really take well despite the intraday bounce we saw. But how do you view the next couple of sessions to pan out for the Nifty and the Bank Nifty itself?
Yeah. Good morning, Lovisha. Thank you for inviting me to the show. So, as the great August 1st was awaited, the day came, the declaration came, and then, as expected, the delay also has happened. So, yes, the jitters did surprise the market, and markets have responded quite well, I should say, because the way the gift was reacting when the news came through, and the way the markets have responded, they have definitely been a 180-degree shift from the kind of sentiment which we are doing. Yes, the declaration does have some negative connotations, but then if you go into the details, you will be able to get more clarity, and that's what people are doing right now across the various mediums of information that are available. So people are dissecting that information, and because it's a big announcement and having a far-reaching impact, it will take some time to digest. So in the process, what's going to happen is that the market is going to bide some time, and we are going to be caught in a range, I should say, between the range of 24,600 on the downside and 25,000 on the upside. So Nifty is definitely going to be caught in the range, and as the option data also suggests, there are some put writing at lower levels, and that could cap the negative sentiment if it were to overflow. So right now, the negative sentiment which has been disturbing in a way is that the FIs are sellers for the 9 straight sessions in a row, and that is not something which is giving a sense of comfort as we start the August series. We all were looking towards Bank Nifty to take the baton ahead and pull up the other indices as well, but that has not really happened, and instead Bank Nifty has disappointed. Barring HDFC and ICICI Bank, the other banks have not really given that momentum. In fact, the gap down reaction which came out post the numbers of Kotak, IndusInd Bank, all that definitely creates a sense of discomfort. So even if you see the Q1 results that have been reported, there it is the slowest in the last 8 quarters. So what it clearly says is that India is going through a consolidation phase in terms of the charts, and yes, the markets are reacting to this phase of consolidation. There is lack of clarity definitely, and I think that we would have to wait for quarter 2 also to pass through before we get some sense of confidence. But looking transposing those kind of movements to the charts, we definitely see that the overall structure seems positive. The mid and small cap select pockets are doing well. So it's a stock specific market. So one has to really fine tune their approaches and go for a stock specific scenario. And on the index, one should continue to play on the shorter range than on a longer range. And that's what is going to be the play for the August series. Still, I get some clarity. So, like I said, 25,000 on the Nifty, I would track for, again, going back to the bullish sentiment. Otherwise, it's going to be a buy on dip, sell on rally approach. And on the Bank Nifty, I would wait for 56,500 to exceed before I get a sense of confidence.
That's right. It's stock pickers market. That's the narrative that is, playing out in the Dalal Street as well. But yes, sir, yesterday we also saw some hit on the Nifty Pharma Index after 4 to 5 days of build-up. We did see that the Nifty Pharma Index lose out given the tariff jitters is being felt for the Pharma Index too. Raja, what are we expecting? Can we expect the index to consolidate in the upcoming sessions?
Yeah, the pharma index managed to hold out, especially in the last, if you take the last 10 trading sessions, the pharma index actually was able to contain the bearish sentiment and hold out. So, yes, it is natural that there could be some profit booking, but I feel that the pharma index should continue. The overall sentiment definitely is encouraging, and any kind of dip you see in the good pharma names should be considered as a buying opportunity.
All right, any dip in the pharma names can be considered as a buying opportunity at this point. But yes, just a couple of seconds before we hit the open, we are expecting a subdued start for the markets, given that the global markets have also not been quite impressive overnight, be it the US markets or even the Asia Pacific markets. But yes, the first rate coming on your screen, very flat start for the markets, quiet start for the markets at this point of time. 24,700 odd levels, that is where we're holding on to, clutching on to at this point of time. If you look at that Sensex also nosedived about like 100 points or so, with about 0.1% decline. Mid caps also in the red, and you can see Bank Nifty also showing a flat to a negative bias at this point of time. Advanced decline ratio, if you look, it's a tug of war going on there, but still you can see advance is taking an upper hand at this point of time. We'll watch out how the rates settle out, eventually. But yes, the first rates coming in, India Wix continues to be above that 111 odd levels, 1% spike coming in for there. If you look at however, given that India Wix is still below that 15 odd level, so it gives a little bit of a complacency in the terms of, if there is a revival in the markets, there could be a support from there on, because that indicates that, there's no really a real panic which is there in the markets. But however, if you look at the sectoral indices, Nifty Auto seeing a cut of about 0.1%, Bank Nifty also with about 0.1% cut coming in there. Nifty IT index seeing a larger cut of more than 0.5% or so. Nifty Metals also not doing well with about 0.3% cut. If you look at the mid cap and small cap indices, no major excitement there. However, mid cap showing a little bit of a positive bias, slim gains coming in there too. Let's take a look at what the gainers and losers, how they stack up on the charts. Only two gainers on the Nifty 50 at this point. But yes, once you refresh, you can see that HUL, one of the top Nifty gainers, once again extending its gain from to the second consecutive day, 4% gains coming in on the back of its good set of Q1 performance. Brokerages have also remained quite positive on the counter. Tata Consumer Products also doing well in today's trading session. Hero MotoCorp, Maruti Suzuki, some of the other gainers on the Nifty 50 as well. On the way down, however, we can see the pharma stocks taking a hit like we were talking about earlier. Dr. Reddy's Lab with about a percent cut. Cipla also not doing well with about a 0.8% cut. JSW Steel, yesterday one of the top Nifty gainers, today seeing a bit of a profit booking with about 0.6% cut. Tata Motors and Tech Mahindra, some of the other stocks on the Nifty 50 losers list. But yes, FMCG stocks that continue to steal the limelight. HUL, Tata Consumer Products with towering the Nifty 50 list. We had some good support coming in for HUL. Brokerages have remained quite positive on the counter. Raja, how do you see the entire consumer basket at this point of time? Because we see the FMCG heavyweight taking the spotlight for the second consecutive session.
Yeah, FMCG definitely has been, has taken over the baton from the pharma space, and the kind of results that are coming out, it's clearly evident that FMCG could see recovery now. And amongst the FMCG space, there are certain names that are continuing to do well. One definitely is Dabur, and second I would point out is Godrej CP. Godrej Consumer Products has been in a consolidation phase for nearly around 2 to 2.5 months, and I would say that it could be a time where one can look this at this particular counter from a multi-month investment perspective, because I see a targets of around 1550 within the next 6 months. So it's a good investing bet, which I would recommend for the viewers.
Okay, all right. Let's also talk about ITC, because that is scheduled to report its numbers today. According to Moneycontrol poll estimates, we expect that, ITC is expected to see a revenue uptick of about 4.2%. However, net profit is likely to remain flat at this point. Margins are likely to remain under pressure, given that there is there is some pressure coming in from the tobacco inflation itself. Today, the stock is showing slim gains, 0.4% gain coming in for ITC. But yes, on the charts, how do you see, Raja, for ITC? What does the near-term prospect look like?
Yeah, ITC, over the last few years, I would say that the stock has not been able to give the sense of confidence, and be it the kind of even with the kind of quarterly results that have come out or the kind of regulations that are coming by the government on the tobacco front. All these things, even they have divested the hotels, but still the company is not able to generate that kind of confidence as of now. And if you are an investor who is looking with a 5 year horizon, which I find it difficult to get people of that kind of caliber, so you should not be looking at ITC. Yes, it was a bellwether stock quite, in the earlier times. But I think that the times have changed, so one should also look at different kind of stocks. If you are looking for a short term, say maybe a 6 months to a year, is where your investment outlook is, because that's the kind of time frame where most of the people are participating in as of now. So then you should not be looking at ITC. But if you're having a much larger time frame, say 3 to 4 years, then ITC could be considered at the current levels.
Okay, all right. For a longer term horizon, ITC can be considered. Let's also talk about Coal India because that reported its numbers yesterday. It's a beat on estimates, but we can see the net profit dropping about 20% on a Y-on-Y basis, and revenue also fell about 4.4%. How the brokerages have reacted? They remain, positive on the counter. If you look at Antique has given out a buy call on the counter because they believe that the volume recovery and the potential subsidiary IPOs remain as the key catalyst for the stock going ahead itself. But yes, the stock has been stuck in a range in the past year and so far this year itself. Raja, what can we expect? 374, that is where the stock is, and today it's seeing a decline of about 0.5%.
Yeah, Coal India has been going through some bit of profit booking despite the tailwinds that are emerging. So it's a clear sign that there are some exits that are happening. Even on the higher time frame, it's not very giving me a convincing reason to stay invested. So if I want to exit my position, that level will be around the closer to the region of 360. Otherwise, the stock is continuing to hold on. So the results are positive. So that gives me a reason to hold on to the stock. But I would keep a stop at 360, because below that, then it could trade much lower.
All right. Let's take some of the viewer queries that is dropping on our live feed. The first query coming in from Debu K is asking the view on Tata Steel and of course Jindal Steel. Both of these count as metal stocks, of course. What is your view on both of these counters, Raja?
Yeah, the metal space was clearly awaiting some direction based on the tariff. And now, post the tariff, we are seeing that the metals have not shown much of an impact. And this clearly says that the negative news is being factored in. And what we could now see is that Tata Steel has been performing much better to its peers. And I would say that this stock can continue to trade higher. Even when you take a look at the last few months, the stock has been able to hold on to the higher levels. And that's what is an encouraging sign. And I would say that that is a good point to consider from a long term perspective, because this stock has got a potential to move towards 225 within the next few years.
Okay, all right. Let's take another viewer query then. Anand Roop is asking the view on TVS Holdings and whether or not it is good for accumulation. What is the view on the counter? Because today the stock seems to be doing quite well, 6% uptick coming in there.
Yeah, this stock is definitely showing some good upside. And the finance space, I would say that has been very encouraging. And this particular stock of TVS, which is able to, which is divested and which is able to perform in the last few sessions, has been clearly indicating that yes, the dips have been used as a buying opportunity, and this stock can continue to move higher. And I would see a targets of closer towards 14,000 within the next 6 months.
All right, let's take another viewer query on that note. Satvika is asking the view on NetWeb Technologies for a 2-year view. We did see the company report a good set of results. Profit has doubled to about 30 crore rupees in first quarter itself. And today we can see the good reaction coming in on NetWeb Tech as well. 5% up the stock is, and past 1 month the stock is up about 14%. But yes, for the long-term horizon, Raja, how does the stock look like?
Yeah, after sharp drop from 3,000 sub levels, so the prices have now reached a point of consolidation, and this stock has been able to sustain itself, and the kind of industry which it is in, it was able to innovate itself on a continuous basis. And the last few weeks have seen a steady up move, and I feel that this stock is a good buy at the current levels with a test of its former highs.
All right, let's also take about Eicher Motors because that reported its June quarter performance. The profit has risen about 9.5% on a Y-on-Y basis. Revenue has also grown about in double digits itself. Today, the stock seems to be doing well, 2.5% uptick coming in there. We can say Nuvama, they have risen the target price to about 6,400 rupees per share on Eicher Motors and they have maintained a buy call on the counter because the Q1 was in line with their estimates as well. And they expect that over FY25 to 28 itself, revenue and earnings could see a CAGR growth of about 11% itself. So yes, good commentary coming in for Eicher Motors as well. The stock is doing well today. But yes, for the past month, the stock has declined about 2% itself. What can we expect the near-term horizon to be like, Raja?
Yeah, the stock has been on a continuous up move over the last few years, I would say. And yes, the positive commentary and the brokerage upgrades are only adding more tailwind to the stock. So the stock should continue further. And I feel that target towards 6,500 is possible within the next 6 months. And yes, any dip towards the region of around 5,300 to 5,250 also could be a good point to add to your position if you have, or if you are going to enter the stock, then choose the dip region to add into or invest into.
Okay, all right. Let's take another viewer query then. Anune has been asking the view on Bharat Electronics or Bharat Dynamics for a fresh entry. Both of these counters have seen over a fall of about 11% itself in the past 1 month. But yes, from a stock perspective and the near-term levels that you're watching out for, Raja, both of these counters, defense names?
Yeah, the defense space itself has undergone a lot of news flows, and the news flow driven rally, I think that probably it carried these names quite a bit. But then right now, I don't think that the needle is going to move much when these kind of news flows are going to come and say either be it getting an order or it getting a kind of reaction. So I would say that one should weigh all these aspects now, because defense, the way it was performing earlier, it's not going to perform now. So use the dips to buy into. Yes, the names are definitely encouraging, and BEL would be a better bet than BDL. And I would say that region around 305 would be a better bet in BEL rather than at current levels.
Okay, all right. BL, that is where you're betting on. All right, let's take another viewer query then. Mukul is asking the view on Bajaj Housing Finance because he's been holding about 170 shares at rupees 600 rupees. So he's asking what is the view for the long term on the horizon. So yes, 600 is where he is holding on. Today the stock has been down about with 113. That is where the stock has been trading at. And if you look at the Q1 update, that was in line with estimates. But Raja, for the near term, what should he do at this point of time?
Yeah, the stock has already gone below its listing low, so which clearly is a sign that not much hope is there at the moment. So, if you want to place a exit level, so that would be closer to the region of 107. So, as long as that 107 level holds, the stock can stage a recovery. But then overall, the stock structurally is not having much data to get into. But then even if you take the basic data of its based on its listing, I would say that the stock has not had a very exciting move. So I would wait and watch and not add further at the current levels.
Not add at the current levels. Let's take another viewer query then. Jaskaran is asking the view on City Union Bank. He's been holding the share at an average price of about 217 rupees. Today the stock has been trading at about 222, so nearly where he has been holding at this point of time. What should he do? Because the Q1 update was quite encouraging on that level.
Yeah, there's a good stock which is showing some good up move here. So there is no cause for exit. One should continue to hold on because its former highs around 245 will also be challenged. And if once the banking sector improves, then you could see more momentum in this particular stock. So there's it's a hold from my side.
Okay, hold from your side. Let's talk about Swiggy as well because that company came out with its results yesterday. We did see that the net loss has doubled on a Y-on-Y basis, and today the stock is down about 3% itself despite the top line rising about 54% on a Y-on-Y basis. But yes, in comparison to Eternal, not that pristine, and today you can see the stock reaction as well. Swiggy, how are you placed at right now, Raja?
Yeah, Swiggy has not, Swiggy and Zomato or Eternal is a comparison in terms of its operations, but then in terms of its performance, definitely not. And I have always been suggesting Eternal as a much better bet if you want to participate in the QSR space. So Swiggy would fall much lower in the priority. So if you want to participate in the QSR space, even after a very sharp up move, Eternal still has a better play, and I would say that you should place your bets on Eternal.
Okay, place the bet on Eternal instead of Swiggy. Let's take another viewer query on that note. Anune Ricky is asking the view on IRFC because his buying price was about 148 rupees. He's asking whether he should book loss or hold. Today, the stock has been trading at about 127 odd levels below his buying price. So, what should he do? What do you suggest, Raja?
Yeah, IRFC, one should keep a stop at around 125 and continue to hold on. Not much far away. But then the thing is that the railway stocks, again, like the defense, so the theme which played out a few years ago are now not finding that much traction. So, yeah, one has to be really careful, and especially between defense and railway, the railway theme is not playing out much. So, the best option would be that keep a stop and exit and look at some other sector which could play out in the next few weeks or months. And I would say that defense and pharma names are looking more encouraging. You can go into these particular sectors on even in the mid and small cap and participate. That would be a better play.
Okay, all right. Mid and small caps, that is the better play. Naveen has been asking the view on Arvind Fashions. How does the near term look like? Because the stock has been an underperformer so far this year, Raja.
This stock has not really performed much, and it has shown some recovery right now. But then again, this stock is in a consolidation phase. So one should be very wary of entering such counters because, yes, the stock will show some encouraging movement on and off. But then I would avoid this stock at the moment.
Avoid this stock at this moment. Let's also discuss about Chambal Fertilizers because it came out with its June quarter performance where the net profit has risen about 22.5% and revenue has also risen about by 15.5% from a Y-on-Y basis. But yes, so far this year the stock has been an underperformer. Today the stock is doing well with about 4% uptick. Would you expect this momentum to continue, Raja? Because today the stock is doing well on the back of its good June quarter performance.
Yeah, considering the way the monsoons have panned out and the fertilizer stocks especially get a lot of traction here, we can see that in the chemical space. So now this stock is going to show some good revival from the current levels because after the last 2 3 months of decline, the stock has seen some kind of supports that have emerged at lower levels. So I would say that at around the 515 to 520 area, it has found some good support. So I would say that. It could be a good investment bet for the next 3 months for a target towards 625.
Okay, 625 is the next target that you're watching out for. Let's also discuss about Chalet Hotels because we did see that the net profit soared over 3x on a Y-on-Y basis and revenue also rose by about nearly doubled on a Y-on-Y basis. The stock is doing well, good uptick coming in, 12% uptick at this point of time. What do you expect the next target to be for Chalet Hotels, Raja?
Yeah, chalet hotels are showing very good promise considering the acceleration in the tourism and the overall hospitality industry is seeing a good promising outlook. And I would say that chalet hotel has risen quite remarkably over the last few years. And the momentum is again seeing a uptick after a brief consolidation, which almost lasted, I would not say brief, I would say rather a long consolidation or more spanning more than 1.5 years in the region of around 950 to 750. Now it's given a good breakout now post the good numbers. I would say that this is a good point to enter this particular counter. I would say that you can keep a stop below this range, which is just broken out of, which is around a 950, and see a move possibly within the next 6 months towards the 1300 region.
Okay, 1300 levels. All right. Let's also understand what are your top picks at this hour because we are into the earning season, but of course, there is a little bit of a tariff jitters which is playing in the markets.
Yeah, I would like to concentrate on certain sectors that have managed to buck the trend and some stocks also which have come out with some good performance. So first, I would go with a buy in Indigo at the current levels with a stop at 5850 for a target towards 6050 and 61,100, 6,100. And I would also go with a long in Geofinance after the numbers at with a stop at 323 for a target towards 345 and 350.
Okay, all right. Those are the stocks that we need to watch out for. But with that, we have to let you go, Raja. Thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets before we move on to our next guest of the show. Well, Sensex is still down about with 177, 100 points, and Nifty is still below that 24,750 mark. But yes, a flat trade. That is it coming in for the markets, and only some of the sectors are showing a little bit of a positive momentum. If you look at consumer durable stocks, they are doing well. Media stocks are holding in the green. However, all of the sectoral indices, be it your pharma and bank Nifty or even the auto stocks, are still down in the trade in today's trading session. Mid cap and small cap index, both of them have also been flat and with a negative bias. But yes, not much support coming in for the markets today, given that both the global markets, US markets and Asia Pacific markets were also quite muted. But yes, let's move on to our next guest of the show. We have Kunal Valia, founder of StatLane, joining us. Kunal, good morning. How are you viewing this tariff news at present? Do you see the worst cat which is out of the bag with 25% tariffs?
Good morning. Thank you for having me on the show. So we have gone back to what was originally announced on April 2nd in terms of the tariff situation. And actually, if you look at sector-specific tariffs on products like steel, aluminum, and so on, the tariff comes out to approximately 26.6 percentage points, which was originally announced on April 2nd, Great Liberation Day for the US. So yeah, the situation looks quite fragile right now. But what we analyze and what we talk today can quickly change, given that the tariff tantrums have been going on for a reasonable long period of time, and suddenly we see there is a lot of changes which comes through. I think we should be positive enough and look forward to this getting more normalized over next 1 to 2 months' time.
Over next 1 to 2 months' time, all right. What is the quantum that you're expecting? Because we'll have the sixth round of negotiations, which will take place later this month itself. And now even 7 days of relief we've got from the tariff front.
Right. So let us look at the background in terms of what is happening and why US is dealing with India the way it is. For example, if you look at India's bilateral goods surplus with US has doubled in last 10 years from $20 billion to $40 billion, basically India's exports of goods. Secondly, India has been importing oil, as we all know, and India's import share from US oil market has actually fallen from 9 percentage points in 2021 to now almost 4 percentage points. Besides this, the Russian purchases also has irked the US to a large extent. So this is leading to a situation where they want access to India's agricultural market with very, very low tariffs and so on and so forth. But that does not go well, as the industry minister clarified yesterday. We think we will be in a situation where we will be somewhere between 15 to 20% tariff if all goes well. And we hope that that comes through pretty quickly, because this uncertain times is leading to unnecessary delays in the capex front from the private sector in India. So we need to be careful in terms of how we are going to go about the deal. However, the national interest is going to take priority over any kind of a deal which is one-sided with US.
Okay. Let's talk about the textile sector, because that is feeling the most heat at this point of time. It's a large portion of the exports do get directed to US as well, and textile as an industry also works on quite thin margins. How do you expect this tariff hike to actually play out for the sector, and do you believe that this is the sector that one can avoid at this point of time?
Definitely, this is one sector where one can stay away right now, given the situation is quite fragile. Already the stock prices have started correcting. In fact, that has been the trend almost for all the textile stocks year to date. So this is one sector where we can wait and watch for some time rather than, trying to catch a falling knife.
All right, wait and watch. Let's also talk about earnings, because because so far it's been quite lackluster. How do you see valuations at this point of time? Do you see any change in earnings growth projection for FY26?
Sure. So while looking at earnings, we should look at the overall picture in India in terms of what the macro developments have been, and thereafter move to earnings and tariff-related concerns. So given the impact of, let's say, the tariff of 25% continues for a reasonable period of time, let's say 6 to 9 months, then the possible impact on the GDP will be somewhere around 0.3, 0.4% of GDP. That will be the direct impact, but we need to be careful about the second order impact as well. A lot of the companies on the private side will be holding back the capex, which may not turn out to be uh, good for India. Already, we are in a situation that if you look at the cons on the market, we will look at the positives while we need to look at what are the challenges for India as of now. India is facing a global slowdown, number one. That will be true for other emerging markets as well as other developed markets as well. But from an Indian context, we are facing a global slowdown. Whether this quarter or next 2 quarters will be very, very difficult from an economic growth perspective. Second, this tariff thing has come up, which is not in line with what we expected. Third, India is facing a very slow earnings growth. Possibly this is the third or the fourth quarter where the revenue growth as well as the PAT growth has been below expectations. So these are basically the challenges which we are facing. What are the positives for India right now? We have a stupendous macros in place right now. Forex reserves are back above $700 billion. Our fiscal deficit is in control. Despite this tariff, it may lead to a temporary kind of an INR depreciation, which will lead to a little bit of higher current account deficit, but still very, very well managed. Another positive for us is that the lower oil prices continue to be there. I think that's a very critical part because that forms a very large basket of India's import. Uh, FIs have been selling India. It has been making news recently, but actually, if you see since 2021, FIs have been largely sellers in the market except for 2023. So large part of the selling, I think, is coming to an end. And we hope that by end of this year, more or less FIIs will be back to buying mode rather than selling mode. Uh, Expectations from earnings has muted down compared to last September, where investors were expecting somewhere between 12, 15, 16% kind of an earnings growth. But now investors are expecting somewhere around 8 to 10% earnings growth. We at StatLane believe possibly FY26, FY27 will be lower double digit kind of an earnings growth, which will enable us to move forward in terms of uh, positive market sentiments as well as positive move in the markets. Because if you see, large part of the slowdown as well as lower earnings is getting discounted in the market pretty fast. Last 1 year, we have been underperforming all possible developed market as well as emerging market peers. It is will be very surprising to note that year to date we have underperformed the emerging market by almost 15 percentage points. So, in this consolidation phase of last 12 months, largely the slower earnings growth as well as some of the macro challenges and the tariff challenges are getting discounted pretty fast.
Okay. Kunal, you mentioned that, there will be earnings downgrade for FY26 itself. Earlier, the street was working with about 13 to 14% of earnings growth projections before the earnings season started. Do you believe that it is going to come down even more?
Right. So if we look at just from a tariff perspective, 3% of MSCI India's revenue comes from gets this export goods export oriented sectors, approximately 2 to 3% of MS India's revenue. I think that is going to take a hit a little bit. But besides that, there is not going to be a first order impact in a much bigger way on the earnings per share for MSCI India. Uh, on given the condition that there is a general slowdown, the capex is going to slow down, etc., possibly there could be a hit of 3 to 4% to the expected earnings growth. We would believe that 12 to 14% will be little on the higher side. Possibly we need to bring it down to around 10 to 11% kind of an earnings growth for FY26, and possibly 12 to 13% kind of an earnings growth in FY27. I would work with those numbers right now.
Okay, all right. All right, Kunal, any sectors that you want to point out that you like and dislike in this market?
Right now, the big contra bet for the markets right now is IT. The index has lost almost 9% in July. The defense sector has also come down. So one is a export oriented sector and other is a completely domestic oriented sector. So I think these are the two sectors which are facing the headwind right now. Possibly we will dip into that on further falls. The domestic facing sectors which are probably safer to be in right now will be financials, largely the big banks as well as some of the PSU banks, which have come out with good results, and some of the sectors relating to manufacturing, etc. We would be very positive on and during this correction.
Kunal, how about the consumption? Because everyone is, on the defensive side at this point of the markets. And yesterday also FMCG's index was doing well. Today also, it's a little defensive sector in this turbulent market. How do you see the consumption pack going ahead?
We have a little contra view on consumption right now. Consumption has been trading at premium valuations for a long period of time, and they have underperformed the market big time over last 18 to 24 months. So we would say just a dead cat bounce right now. So HUL has come up with a reasonable volume uptick, but we think the valuations does not justify the price move for a sustainable period of time. So we would rather be underweight consumption or largely FMCG, and look at other sectors where there's going to be correction, which is continue to take place right now.
Okay, okay, interesting. Kunal, many of them have been quite divided on new age stocks. Some of them have shared that they are just momentum plays and not something to be looked at from an earnings point of view, given their high Ps. But what is the approach that you would suggest investors should take when they approach this segment?
Given the uncertainties around, we would stick to businesses which are profitable in nature. So, as you rightly mentioned, that some of the investors are looking at the new age sectors in terms of a momentum play. Yeah, a small part of the portfolio can be looked at from that perspective, but largely we will stick to sectors and stocks which are profitable in nature with strong balance sheets and good market share.
Okay, 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 all right. All right, with that, we have to let you go, Kunal, but thank you so much for your time and we hope that we connect with you soon.
Thank you.
All right, let's take a quick check of the markets. We did open in the negative terrain. Let's take a look at how they stack up right now, because Sensex is still down with about 180 points downtick. Nifty below that 24,750 levels as well. But yes, flat trade for the market so far. The only index which is shining in the subdued markets is your Nifty FMCG index with about 1.4% gains, given that brokerages have been quite bullish after HUL posted its decent set of June quarter results, and Tata Consumer Products also seem to be doing well on back of that as well. On the other hand, if you look at some of the other sectoral indices, auto is still in the red, pharma index extending the loss to about 3% now, down now with about a 3% decline. On the other hand, Nifty Realty is showing some positive bias with about slim gains. Nifty IT index continues to be a leg out with about 0.8% decline itself. But yes, small cap and mid cap index, both of them, no enthusiasm from there itself. But yes, this is all that the markets have been, projecting at this point of time. Whether or not there could be recovery in the second half is something that we'll watch out for. But the global markets have been quite unsupportive, and that is where something that we could not see some comfort going ahead as well. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.